Netflix is expected to report quarterly results after the bell today. Joining us now is Tom Rogers, Orbit Gaming Executive Chairman, Newsweek Editor at Large, and a CNBC contributor. Tom, they might get a bump because Hillbilly Elegy streaming is up 10,000% in the last week on Netflix, something like that. Is that going to help?
Well, I'm not sure any one program is going to help, but it goes to an interesting point here, which is original programming, which everybody used to think was the key to Netflix success, means a lot less these days. 2 years ago, 42% or so of the top 100 streaming shows were originals. Now it's down to about 20%. In the top 20 shows, 9 of those 20 are network shows, Netflix shows licensed from others on a non-exclusive basis, with only one original from Netflix in that top 20. So there's been a bit of a shift, and so an older movie like that coming back into the forefront, not unusual given what Netflix is doing on the programming front these days.
I mean, we're back to this streaming world. There's Netflix, and then there's everybody else. Everybody else. I even saw Disney recently said they're making some moves to look more like Netflix, to try to make the streaming business as profitable or as much of a core asset as it is at Netflix. Is anyone else going to be able to do it, or is it just going to continue to bleed money for everybody else?
Well, Netflix is certainly widening the gap because they have the global scale, which has given them the ability to have substantial cash flow now being generated from that scale, which gives them every ability to reinvest in programming. And, they had 92 original seasons of programming for the quarter. You look at Disney Plus, and it has mid-teens in terms of original new seasons. And they can go from that and really keep churn low, which is really what's hurting the legacy media companies, streaming services. Netflix churn is under 2%. The average for the other streaming services is about 5.5%, which is really high. And the cost of bringing those subscribers in, having them churn that quickly, really hurts the economics. But there is another player on the scene, which is a real trend here, and that's YouTube. YouTube to the TV, I'm not talking about to the phone, to the TV, now commands about 10% of streaming audience, overall television time, with Netflix at about 8% of overall television viewing. And when you start thinking about advertising, which both Netflix and all the other players are now increasingly after in the streaming world, and this has been a challenge for Netflix, you're talking about YouTube having 2 billion eyeballs around the world to be able to monetize advertising. And in May, Netflix indicated they were up to 40 million. So Netflix has a real challenge on its hands with the advertising piece.
So is 2 billion eyeballs 1 billion people or 2 billion people, just so I know?
Overall, when you're not just counting connected TV, it's 2 billion people.
2 billion people. Okay, so 4 billion eyeballs. Let me just to be,
good
clear.
Counting.
Just to be precise. I just want one more, Andrew, and then you can go. When Netflix reports, what could cause Netflix to jump 3%, and what could cause a sell-off? What they're saying now, whether it's how many subscribers are adding, or whether it's international, or I don't know, whether it's some financial metric. What would be really good? What would be really bad?
Well, Netflix so often trades on its sub number, which is obviously important. But
is it going to be good?
I think they'll probably overperform the consensus of 4.5 million. I would expect them to do better than that. Anything in the advertising tier, which, as I said, they reported having 40 million users. They're getting into live sports now, because nothing like sports to drive viewership. I think a big number in growth on the advertising tier would certainly send things going.
You want to weigh in on Warner Brothers Discovery exactly, and what you think that kind of, I don't know if it's a split up, a breakup, asset sale, how you would do it, what you would do? That's something is on the table here.
Well, I'm not sure I'd put too much weight on that consideration right now. I think Warner has a lot of options in front of it. You know, everybody points to its debt, but its best asset in some ways is that debt is very long-term, goes out 14, 15 years at very low interest rates. So they're not facing a debt crunch of some kind. Obviously, the company isn't going to stay in its current form. I think splitting off the linear is interesting, but I think you got to focus more on the streaming side and what's going to create growth there. And it's got real options.
Okay.
What Max HBO has that Paramount Plus and Peacock don't have is more of an international global franchise. And I think we're really at a point that streaming success is going to be a function of how global you are. And so I wouldn't be surprised to see some move which in some way drives a consolidation on the streaming front among legacy media players.